Yo, what is going on, guys? Welcome back to another YouTube video straight from my car. As y'all can see, you can probably see the sky and the clouds and the planes behind me. Yesterday I uploaded a video and apparently the settings on my laptop weren't proper, so I had to change them because yesterday's video was mad blurry. Hopefully this one's not blurry, so make sure you stick till the end. Drop a like already if it's not blurry, so you let me know. Let me know in the comments if it's blurry or not. Anyways, if you're new to this channel, you don't know how these videos go. Basically, I'm gonna be breaking down the topic of this video being daily bias, how I find it myself, and keep it pretty simple, honestly. And then after that, I'll kind of also dive in, as always, into my actual entry model and just a couple extra tips like I do in every single video. Now, if you are a recurring viewer, then welcome back. You already know how it is. I'll give you the sauce and then break down my entry model a little bit and then some tips and close it off for you guys. Now, this video is obviously going to be about daily bias, like I mentioned. If you guys are looking to see my entry model on a day in and day out basis, just daily basis, and not just mine, but other people that also trade, then we actually have a free Discord that you can join. Link is in the description, first link right there. Completely free. You can just join, talk to us. We post every single trade we take, as you can see on my screen, with a detailed breakdown. This was today. It ended up being a break-even trade, and then it hit TP. It is what it is, bro. With a picture, we got a bunch of trades in here. Literally every single trade that we take, win or loss, we don't care, bro. We also have a free course that we made in-house if you want to join that and check that out. It's made by us as well, and a bunch of other free stuff for you to take a look at. So if you're interested, join the link in the description. Other than that, let's break right into it. So finding daily bias. There's a couple of things to it, okay? I'm going to break it down in a little list for you guys. This is today's price action, by the way. So the first thing that I do in terms of finding daily bias is switch time frame, and I go into the higher time frame. Obviously, looking at the higher time frame gives you a better scope of where's the market headed to currently. Since we're day traders, we're taking a trade that's pretty much going to catch one of the big moves of a day. We want to make sure that we're aligned with what the current market is moving like on a day-to-day basis, right? We're not swing trading. If we were swing trading, we would most likely be looking at an even higher time frame, such as the weekly or the actual daily time frame. But since we're day trading, we're going to be looking at time frames in less than a day to see what actually makes up each single individual day. Now, a great time frame that I like to look at, that I've learned from others, is the 4-hour time frame. So first thing is, we're going to go ahead and switch to the 4-hour time frame or the 1-hour time frame. These are amazing time frames to take a look at when finding daily bias. And don't worry, if you've already heard this, I'm going to show you exactly how I use them to find my daily bias, and it's fairly simple. It'll be like 3 steps, and then after that I'll break down the entry model. So don't worry, keep your pants on. Let's go to 4 hours. So when we go to the 4-hour time frame, obviously today was completely different. On the second half of the day, we had a splurger candle go here, and we're honestly about to break structure to the upside. But finding daily bias on the 4-hour time frame. First thing, we go to that 4-hour time frame, right? Now, what is the second thing we want to do once we're here? We want to identify structure, but that's not going to be it, okay? So chill. Identify structure / trend. Yo, something is in my eye, bro. Okay. Oh my gosh. Woo! Okay. All right. Identify structure and trend. So once we identify structure and trend, first, let me show you what I mean by that. So go to the 4-hour time frame. Obviously, we're going to be looking at the most recent trend. So currently, what is the market doing? We are dumping, bro. The market is crashing. This is 2008. Basically, it's been horrible. Anybody investing long-term, me, who just started investing long-term, yeah, bro, we're down bad. Anyway, this is what the market is doing right now. So we are trending down. Now, for an actual example that I'm going to end up linking to my actual entry model, actually, I mean, I can break down today's trade, honestly. Like, I'll just break down today's trade. Why not? I'll show you guys that trade today, and it was actually pretty good. The only thing is it hit break even, and then we actually hit TP after that, so I didn't really make gains today. I made like $4, so can't even afford a Chipotle bowl. But anyway, let me show y'all what I'll break down today's trade for you guys. So first thing I want to find, I don't pay for TradingView, by the way. I use NinjaTrader. First thing I want to find is the trend. So obviously we're bearish right now. I'm going to identify after the trend now that we know we're bearish by, you can tell we're making lower highs and lower lows, okay? So now we're bearish. So structure has been identified, bearish. Okay, so now I'm already leaning bearish. Now we're gonna go into more detail. What does bearish structure consist of? Bearish structure, for us to want to see and confirm to ourselves that we're gonna continue in this bearish structure, because one thing is being in bearish structure and beginning to break out of it, and then another thing is being in bearish structure and seeing continuation patterns that confirm that we're gonna maintain that bearish structure and continue it, obviously, like I just said. So what are these things that we want to see? Not what this green candle is doing right now, inversing to the upside and possibly breaking structure back up, but we're going to be looking at everything that happened before this big green candle, because that's when I actually took the trade. So things that happen, what happens, what does structure consist of, right? We are seeing lower highs and lower lows, so that's already confirmed, so that's good. We're seeing that, so that means that we're obviously trending down. Basics, bro, market basics. All right, baby step. Now where it gets a little more interesting is I want to see, some people call it bearish order flow, bro. I'll just call it bearish order flow. I'll explain that in a second. Bearish order flow, again, everything we're looking for is bearish because that's the current trend that the market is in, so we just want to confirm that we're having bearish order flow. Now, what does bearish order flow mean? We're having bearish displacement legs and imbalances, okay? And then I'll show you what that means. And imbalances are being respected and price delivers from them, okay? What the hell does that even mean, bro? Let me tell you right now. I'm gonna tell you right now. Chill. So, first off, imbalances, I'm talking about fair value gaps. It's really the only ones that I trade. You could trade order blocks. I mean, that's not an imbalance. I'm talking about PD arrays. I mainly focus on imbalances. The reason why I focus on fair value gaps is because typically there's so many ways to mark out. You can use a fib tool, things like that, for a retracement before a continuation. But what I like to do is find a fair value gap, because they tend to get retraced into in the higher time frame to continue a trend, and then we deliver off of them. So find a fair value gap, retrace into it, typically a good area of retracement before continuation, and then find a lower time frame entry from there. So what am I going to be looking for here? We're going to be looking for these things to be respected, okay? So as we can tell, we're going to start marking out fair value gaps. If you don't know what a fair value gap is, I'm going to break it down real quick for you. So we're going to be looking for a bearish one, right? So a bearish fair value gap real quick is basically, let me zoom in hella, bro. Sorry, I'm on my laptop in my car making this content for y'all. I'm trying to get some sauce for you guys, so don't complain, boys. All right, so a fair value gap consists of 3 candles. So there's going to be a middle candle that's typically the bigger candle that displaces in a certain direction. There's heavy volume in that direction, and basically sellers, in this case, since we're looking for a bearish one, sellers are stepping in, taking control over buyers, and we're basically making a large move in a shorter than normal amount of time. So it's a very big move compared to the rest of the average market. And behind it comes a candle that, it doesn't matter if it has a body or just a wick, or if it has just a body. You drag out from the wick of the last one and then to the wick of the third candle. Okay, so we're basically like this. So this right here, from here to here, that is a fair value gap, and then you draw it out. And I'm gonna change the color and use blue. So that's a fair value gap right there. Now, what are we seeing? Fair value gaps, we want to see, in order for us to confirm that this trend is continuing, we want to see bearish order flow. So what does this mean? We finally broke structure to the downside right here in the market on the higher time frame. So now we're bearish, right? Because we broke structure to the downside. But we want to just confirm that we're actually maintaining bearish structure. So what does that mean? we want to mark out our fair value gaps along the way in the trend. So as you can see, we have this one. Guess what? What do? We don't close above it. That would be a bad sign. We keep closing inside of it. We fill the whole thing. Think about it as a gap. That's why it's called a gap. There's a gap in price, technically. And you want to respect that gap. We can fill it, but we don't want to obliterate it, right? We do not want to obliterate it, bro. So we want to fulfill it, fill it up, and then displace from it or deliver from it or continue from it, okay? In the same direction. So this is a good sign. We have one, we generate one, boom. We respect it, close below, good sign. We have another one, we generate, close inside of it, deliver from it, good sign. We have, let's see, we don't get very too many because we get some big wicks, but like you can see that we displace, we respect the displacement. Think about it as if it were a fair value gap. Here we get the same thing, which is what we played off of today. So let's go ahead and zoom in on there. We got this. Again, ignore the big drizzy Drake green candle. So I'm going to not worry about that. We only traded this up until the 10 a.m. candle. So what do we get here? This candle, this fair value gap tells us, okay, we're most likely, once it's created, we are most likely going to retrace into this area. That's exactly what we do. So we retrace into this area, fair value gap. Now, this is just to confirm our bias, right? So we've pretty much already identified our bias for the day, but what is our draw on liquidity for the day? What does that actually mean? The draw on liquidity for the day is going to be that low. Now, let me explain real quick because this is super important, okay? So, draw on liquidity is literally our profit target for the day, okay? Pretty much. You want to formulate it to become that, okay? Maybe you don't get it exactly because you end up finding a different trade or something, but this is the goal. Draw on liquidity. Where we think the market is likely headed to than any other spot, and it has to do it. Obviously, it's not going to happen 100% of the time, but this is the most likely place where the market is headed to in the day. How do you actually find that? I'll make a whole nother video on this, but I'm literally going to break it all down in here too. So I'll make another video for people who never watched this video, okay? But y'all are getting all the sauce, okay? So when we have bearish structure, right? Let me draw it out here real quick. So when we have bearish structure, we come down, we go up, we go 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 down. Okay, cool. We have a high, a low, a high, a low, high, low, high, low. Regular trend. What does a structure or trend consist of? In order for us to continue bearish structure, which is what we're expecting, number one, we're expecting bearish structure to continue. So what does that mean? If we're expecting bearish structure to continue, then what needs to happen for that bearish structure to actually literally continue? A new low has to be put in. The previous low has to be taken out. Because if that doesn't happen, then we're not continuing bearish structure. So this low, for example, if we're looking at the market at this area right here, and we're saying, okay, I'm looking to short here, but where am I going to target? Brother, if we're going to continue doing this pattern, where's the most likely next place we have to go minimum? Right here, if we're going to go lower. So I wouldn't really try to target past this. You can, but I would definitely take a profit at that last low of the leg, because the market only has to tap this by a tick to already generate another low and create more bearish structure. That will already make it another low. So another low being created, it's already proceeding with that bearish structure. Now, we don't know how low it's going to go, so I don't want to be taking profits lower and lower and lower, right? But I know minimum, if the market has to continue lower, or if it wants to continue lower, that low has to be taken out by at least a tick, or tap it by the exact amount, okay? You can either form an equal low or not. But that's how you identify the draw on liquidity. Where's the market most likely headed to next? If we're in a bearish trend, it's most likely headed to that previous low, okay? So let me go ahead and delete all this scribble, scrabble, double, and kindergarten drawing. Again, if this sounds stupid to any of y'all, bro, clown me in the comments. But like a lot of people have been leaving nice comments because it makes sense to a lot of people. So I don't know, bro. Let me know if this makes sense to you guys. Drop a W or a nice message. People have been dropping. Some people are trading my strategy better than me, and I'm low-key getting pissed off because this month has been whack, bro. And some people are making bread with the same strategy I use. So it just be like that, bro. I'm about to plug you guys in on the rest of the video too. So stay tight. Keep your pants on, all right? So we've identified our daily bias, and now we need a draw on liquidity, aka where the hell are we actually going to take a profit at, and where are we aiming a trade to? Because you can pull the back of the bow, right? You can put your finger on the trigger, but you actually got to aim, bro. You actually got to know where you want to go, all right? If not, you're going to get cooked. So what are we looking at? This low right here, this low right here. Can I draw it out any better for you guys? This low right here is where we're likely headed to, and guess what happens? What happens at 10 a.m.? Boom! We open, we form a high, low, take out the low, boom! Guess what, boys? That still put in a lower low. So it continued that bear structure. So guess what? The daily bias for the day was correct. All right? There's going to be days where this doesn't happen, obviously, because your daily bias won't always be correct. But if you're following the trend on the higher time frame, you're more likely to have the right answer. So when you have daily bias, let's say it's bearish, on the day, just expect price to take out that last low, okay? So that's what it is. So we put in a new low, and now it continued bearish structure, okay? If this doesn't end up closing above here or above here, then we're still bearish, okay? Now, we did inverse this 4-hour gap, and I'll get into that later. But, yeah. So, that was pretty much all on daily bias. If you want to understand more of my strategy, I'm about to dive into it. So, do not skip this video. Keep your glasses on. Keep everything on. Again, bro, keep your pants on. People are weird, dude. And let me explain this, okay? So, let's dive into today's trade, all right? Today's trade, going to go down to the 1 hour. This is going to be fairly, quick. So, 1 hour, what do we see? We have our 4-hour gap, but now we want to get more specific in terms of our entry. So screw the 4-hour gap. Now I'm marking out a 1-hour gap. So I'm going to mark out a 1-hour gap. Bro, why am I on ES, dude? I took my trade on NQ, so let me switch to NQ. Oh, shit. Let me switch to NQ, sorry. All right, there we go. We're on NQ. This is where I actually took my trade on, by the way. It's the same, almost the same, so don't worry. So the same daily bias, same all that, boys. So let's go to the 4-hour just to make sure it was the same. Yep, look, we took it out. Okay, we took it out. All right, so NQ, we go down to the 1 hour. On the 1 hour, what are we seeing right near market open? So market open is right here, this candle. What do we get? We have a hourly fair value gap right here. Hourly fair value gap. From here to here, draw it out. Now I'm going to drop down into the 15 minute. It's going to be my next, pretty much the lowest I'll go in terms of a delivery. So now I'm looking to deliver off of a fair value gap, right? The last one that we used was just for daily bias. Now we're looking at the hourly and the 15 minute. So on the 15 minute, now I'm looking for this one right here. There we go. We got one. So we got one. Draw it out. There we go. So now we have a 15 minute that's inside of the 1 hour. So I don't really care about the 1 hour. This is my point of interest now, okay? And guess what we do? We literally tap perfectly into it. It was beautiful today. And I still got cooked on break even. It is what it is, bro. If I didn't move stops to break even, it would have been full DP. But I'm sticking to my rules. And I made a whole nother video on rules the other day, so watch that. Alright. Also, join the free Discord if you haven't. Link in the description, bro. I don't even know how long this video has been. I feel like y'all are literally going to see it turn nighttime outside behind me. Alright. Now I'm dropping down to the 1 minute. Because when we deliver off of a 15-minute gap, I'm ideally looking at the 1 minute. It's just the aligned time frame according to people. And that's just what I stick to, okay? So we're delivering off a 15-minute gap. So I'm looking at a 1 minute entry. Model entry. So what are we actually looking at here? Let's see. We sell off like crazy. All right. So what am I looking at for here? we now have I'm gonna list out everything we've collected so far, boys. First thing we collected, bearish bias. Second thing we're collecting, we've identified our draw on liquidity. Okay, where's the market likely headed? So until we feel that, I'm still bearish. That's what that means basically. So until we take that out, I'm pretty much still bearish. We have our draw on liquidity lower. We're inside of a 1 hour bearish fair value gap. We've also found that we want to tap into, and we end up doing it. So now we get once we're here, this is when I already start looking for my entry. Once we're here, we start getting we're now tapped into a 15-minute bearish FVG, fair value gap, which is this blue one right here. Now I'm looking for a 1 minute change in the state of delivery, boys. And that's pretty much it. Is this a fair value gap? Bro, I was looking for an inverse fair value gap, but I was literally not going to get one. So I just went off of the 1 minute change in the state. Now, change in the state of delivery, basically, look at the last pair or more of candles in one direction. Then you know you're beautiful. All right. Shit, bro, I'm gonna get clipped. So this is just one candle, so I wouldn't really count that. We get 2 candles, so now that's a set of candles. So we have a set of candles on the 1 minute, and then that red candle right before it, right? So red candle, this is a retracement. The body of where this leg started delivering from that caused the last high to be put in, that is where I want price to break under, okay? Now, I'm going to mark that out. I want to close below there. So close below this green. And we actually end up getting it. And then we retrace beautifully right into it. Beautifully right back into it. And then I'm shorting right on the retest of that. My stops are at that high. My 1-to-1 is right here. It literally gets hit by a tick. So I move my stops to break even once it got hit. And then we go back up. Now, as you can see, bro. Dude, this thing made bread. Like, we hit like a... What is this, bro? This is crazy. Oh my gosh. There's like a 5R, bro. Not bad. But yeah, I got stopped out. We got another fake out move to the upside. Of course, they knew I had entered the markets, bro, and they manipulated to go back up. It is what it is. But yeah, no. This was pretty much a video breaking down my entry model and daily bias. I kind of gave you guys too much info, too much sauce. So I would really appreciate it if you guys hit the like button and subscribe to this channel. It means a lot, actually, to me. Every single person that leaves a nice comment is what I post on my Instagram story. So you guys actually mean a lot to me. Every single person that likes the video, subscribes, comments. Thank you guys so much. This is why I'm literally sitting in my car right now making this video for you guys. Thank you so much for watching. I've been getting a lot of love on these videos lately. And let's all make it in 2025 trading, okay? This is what I'm going to be using to make it. And just join the free Discord if you guys want to trade alongside me and other people that trade different ways as well. So other than that, boys, thanks for watching again. And I will see you guys in the next video, okay? Peace.